continue holding it for medium to long term from here.
That view, but let's stick with the auto theme now. M&M is the next counter that Vijay from Chennai wants to know about. Sachin asking what could be a short-term target? Is it a good time to buy? Because we've seen consolidation at the 3,000 odd range. What's your view?
So currently the stock is in a downtrend, and every time when it is making a new high, we are seeing like it is getting a counter selling. So basically it is making lower high and lower low pattern, which is basically a downtrend pattern. Again, with trading below all the moving averages main. So I think one should not enter right now. If someone is holding, then one should definitely keep a strict stop loss of 28.90.
Viewers, you can also call us for your stock-related queries as well. The landline number flashing on the top of the screen right now. And Karthik from Bengaluru has exactly done just that. Karthik, very good afternoon to you. Welcome to the show. What's your query?
Yeah, hi, good afternoon. I have a query on Cochin Shipyard. I hold around 20 shares with an average price of 2069.
Okay.
I wanted to know if it is a good time to exit or average it. Just wanted to know on that if I can exit and look for investment in any other shares or better in looking for the long term.
And Karthik, when you bought this, was this more on the view from the charts or did you look at the fundamentals?
This was more on the charts.
On charts, got it. Sachin, what's your view on Cochin for a viewer, of course, because he's currently in the losses, but the shipbuilders not doing too much at this point of time. What's your view? Should he exit Cochin Shipyard, buy something else?
Definitely, the stock is in a downtrend on a daily basis, but on a weekly and monthly basis, it is actually has made a good higher base levels. So what he can do, basically keep a stop loss of 1350 on a closing basis, and he can hold. Once if it is closing below that level, then only he should exit, or else we can see some kind of a pullback levels on a higher side, but definitely not 2000 levels. He has to keep waiting for that levels, but as the short term trend is in a downtrend, we cannot say to average as well. So do not average, but at least he can hold with a stop loss of 1350.
One. Yep.
Okay, all right. So that's the view coming in on Cochin Shipyard. In fact, what our analysts said in the morning as well, right? The entire defense pack has been doing well, but a lot of these shipping names have underperformed. So that's something that, of course, you should keep in mind. But the next one is on Force Motors. Sriram from Chennai wants to know if this is a good time to maybe enter this counter. Sachin, what would your view be?
So on a daily chart, it has made a lower high, lower low pattern and has slipped below all the moving averages. Right now, it is not a good time to enter, but definitely if once 19,800 levels has been captured on a daily basis, the trend will be changed from down to up. So that will be the level. But right now, there is a risk of slipping below 16,900 levels. If it is slipping below 16,900, we can see more lower levels towards 16,000 and 15,000 as well. So one should wait right now.
Got that view, Sachin. But next question coming in now on Eon Exchange. Our viewers wants to know if it's a good time to buy this stock for the next 5 years. This is Birandeep who's writing it for the stock-related query. But, Radharaman, we've seen the last 1 year stocks down almost 20%. I think from those highs seen back in 2024, mid-2025, not yet recovered. But a play on the water side, do you think that it's a good time to enter the stock now?
Not enter the current prices, the stock has been in downtrend, any kind of a thing. So it doesn't make sense to enter right now and maybe hold on in particular this investment. So you should not be buying at this current price.
And anything you like from the space that interests you? Because we've seen VA Tech Baba seeing a very sharp uptake. Anything that you like in the space, or do you feel valuations are stretched?
So valuation is a bit stretched. So as of now, I will not be very happy entering in the current valuation. So I would wait for the corrections to happen.
Okay, all right. The next one that we have is from Bhaira, who's asking about Pace Digitech. He wants a view on this particular counter from the next 6 months perspective. So, Sachin, what is the resistance and stop loss, and of course target price, if any?
So the stock, I think this has been recently listed. We don't have that much chart data on it, but still currently what the stock is doing after the listing, it has gone making a lower high, lower low, and right now it is into a pullback mode. So once if it is closing above 220 levels, we can see the all-time high levels and above levels. But till then, if it is not doing that, we can see there is a risk of going towards 160 and 150 levels as well. So if someone is holding, he has to keep a strict stop loss of 178 levels on a closing basis.
Got that view, Sachin. But also this week has been good for the company. Got a big order win as well. So I think it has been buzzing this week at least for Pace Digitech. Let's look at the 1 week performance also very quickly on Pace Digitech as well as we move on to our next query, and that 13% jump that we've seen in this week itself on the back of that order win. But L&T is the next counter that that we're putting the focus on. Kohinoor Ghosh is actually holding shares at 2,100. So he's taken his name very, very literally, bought a good stock at a good price and sitting on gains of almost 6 lakh rupees at this point of time, almost 7 lakh rupees. Radharaman, he's asking a likely 1 year target because I think he's held the counter through what we've seen, of course, the war in Middle East and hence some correction, but back at that 4,000 level. What can he expect in the next 1 year, and should he continue to hold?
I think she should continue to hold the particular stock. I think the war is also getting over by the time the peace is getting prevailed. And L&T, one of the biggest beneficiaries once things start coming back. I think there will be a lot of rebuilding happening in that region. And not only that, if you look at within the country as well, so I think a lot of capex announcements should happen. And effectively, the biggest beneficiaries will be L&T. So I think she should be holding on. I think she's also entered and she's a patient investor. And one should be holding on with a clear view. I think anything between 20 to 30% gain, one should be eyeing in this particular counter over a period of maybe next 12 to 18 months.
Okay, all right. So that's the view coming in on L&T. I think we've got Pramod calling us from Bengaluru. Pramod, a very good afternoon to you. Go ahead, ask your question.
Yeah, good afternoon. Actually, I bought 30 shares of HL at the rate of 4,134.
Okay.
Right now, I'm sitting at the profit of 6%, but from very long time, it's not giving any kind of profits. So should I exit and invest in Proj Industries? So that's as an alternative I'm looking.
Okay, all right. Got your question, Pramod. It's a complete shift, right, Radharaman, from HL to something like a Praj Industries, but of course it's in focus today and down about 2.5% on the back of the core GE F414 engine deal, which has seen sharp escalation in terms of prices, which is used in Tejas. But any view on how should he continue to hold? He's sitting on profits of around 7,000 rupees. Should he exit, book profits and shift to something like a Praj?
I think he should hold on. He's got a good stock. It's a matter of time. And when any investing, we need some patience here. So he should hold particular stock. I think it's a matter of time where the stock should move ahead. And he should hold on. He should not switch. He should continue holding this position. And he's got a good stock. I think there's a lot of tailwind happening on the defense side. So it'll be good for him to hold on.
Got that view. Also another one for you is Radharaman. The next one's coming from SKF India. Dilip from Kolkata holds shares at 1,947 rupees per share, so slightly in the loss right now. Asking if he can continue to hold on, or is it better to use that amount for the other demerged entity, which is SKF Industrial? What would your opinion be?
So I think he should hold on the current position. He should not book losses as of now and wait for the right time to exit. So he should hold on to the current positions.
Okay, all right. So that's the view coming in, of course, on SK. But time for a rapid fire round. Radharaman and Sachin, you both know to drill. Try to keep your answers as short as possible. The first one is on Honasa. From a short-term perspective, our viewer is bought at the levels of 403. Continue to hold, exit, Sachin.
So Honasa continues making a lower high and lower low pattern. Basically, it is a good stock. If it is want to hold, the stop loss will be 398. We hold with that stop loss basically.
Bajaj Auto bought at 10,500 by Jay Krishnan. He's asking what he should do and if we can average down as well. Radharaman, the buyback's also on. So is it a good? Would you recommend him to apply for the same?
You should tend in the buyback, in fact, and buy it back once you get the value stocks.
Okay, all right. The next one is on Power Grid. Subramaniam from Bengaluru is holding 114 odd shares at the levels of 49. Continue to hold from a long-term perspective, Radharaman?
The which stock? Yes, missed that.
Power Grid.
I think he should hold on. Yeah.
The next one coming in, it's on Wipro. Our viewer E. Venkatraman, who's a senior citizen, bought shares at 194, so currently sitting on a loss. He's asking if he should add more at this price. Would you recommend that, Radharaman?
I think he should add at the current price.
Okay, the next one is on MTAR Tech. This is from Divya, who's writing in from Abu Dhabi. Wants to know if this is the right time to enter into MTAR Tech. What are the charts suggesting, Sachin?
So stock is in an uptrend. Someone wants to add. The levels will be 67.50.
Got it. But Radharaman, just quickly on Wipro, because the growth's been largely absent, you said that you should still look at adding the counter, right, at this price?
Yeah.
Okay. And the thesis is valuations, I'm guessing?
Absolutely, the valuation.
Okay, got it. Next one's on Gaudium IVF. Our viewer wants to know if he should continue holding his 200 shares at this point of time. What would you recommend, Radharaman?
He should not hold, he should sell it.
Okay, the next one is on Kirloskar Bros. Dr. Lavanya from Eluru has bought it at the levels of 2180. Continue to hold, sell, Sachin?
Yeah, you can hold.
Schaeffler India bought at 4150 by our viewer Satya, and he wants to know what price can you look at to exit. Sachin, what would be your opinion?
So to exit, basically 3980 levels, if it is broken, only then exit. Till then he can hold.
Okay, Varun Beverages from a 1 year point of view, can I buy right now is what Kumar from Hyderabad wants to know. Radharaman?
He can add, yeah.
Shrikant from Bengaluru wants to make an investment either in Bharat Dynamics or NIBE. Would you recommend that either of those, Radharaman?
I prefer Bharat Dynamics.
Okay, the next one is from Murli, who's writing us from Hyderabad, asking about Tilaknagar Industries. He's got around 15 shares at the levels of 370. Wants to know if he can continue to hold this for a year or so. Sachin, slightly long-term view on the charts.
He can hold with a stop loss of 400.
IFCI bought at almost 86 rupees per share from Prashant. Sachin, he wants to know if he should continue to hold. What's the short-term view?
So hold with a stop loss of 70.
Can I enter Geo Finance right now is what Vedant wants to know. What is your view on this, Sachin?
Geo, no.
Sorry, what's your view, Sachin?
No, he should not enter right now.
Okay, got it. Chennai Petro also, if he should, the next query is Sachin, if our viewers bought shares at 932, asking if he should continue to hold this counter or sell out.
Hold.
Rakesh Gupta from New Delhi wants to invest 4 lakh rupees into banking names. He wants to know whether Union Bank, Karur Vysya Bank or RBL Bank, which one is a better bet, or any other that you like in the space. Radharaman?
RBL Bank looks quite impressive.
Anuj from Saket, Delhi wants to know about Ramco System. He's holding shares at 1,000 rupees per share. Again, Radharaman been a rank underperformer. Should he still continue to hold stocks up? Ramco Cement is the one that I'm talking about. What would you recommend here, Radharaman? Is it a better play, or should he switch out to some other cement major?
I think he should switch to maybe other cement ones, the larger ones.
Got it. Well, that was the last question of the Rapid Fire in this edition of Ask Profit. Sachin as well as Radharaman, thanks so much for joining in and giving us your views. But viewers are out of time on this edition of the show. Thanks so much for watching. Stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform.
Very good afternoon. You're watching India Market Close, and we are looking strong. We're looking strong, at least for the last half hour or so. Markets near the high point of the day, slightly off, but near the high point of the day. 24,051. Alex, this is the range from which markets recede over the last 4 or 5 sessions. This is the tough one, right?
Yeah.
You get here, but then closing above here becomes difficult.
Now, it's been an incredible session so far, because if you called it over here and you thought that it's going to be a tough day, you've actually had multiple switches in the market breadth and indeed in the way that the benchmark has moved. The thing is that the broader markets are not looking as strong. So this is maybe a few large caps that are pulling the weight significantly. So banks are looking good, a few IT names are looking good, Trent is looking good. So these are the counters that stand out, of course. So therefore, it's a small pocket of large caps that's doing incredibly well today.
So let's pull up the advanced decline ratio first, and then we'll get to the Nifty heat map to give that picture that we're showing you. And look at that. It's actually pretty even, Stevens, with the advances now nudging above, the green line nudging above, but the distance is not that much. So
I love the fact that we've had so many exchanges over the course of the day.
Correct. It's been range. It's been a range-bound kind of a neck-to-neck kind of a day. Let's pull up the Nifty heat map and just show you who the key winners are. Indigo Airlines on a tear. You know, even as all of that worry about crude prices comes off, Trent is shining today. Tech Mahindra, Infosys, Adani Enterprises. Remember the AGM and that big speech from the group chairman today. TCS doing well, DRL as well. On the losing side, it's a Bajaj Auto, Tata Motors PVs who are smattering of your autos and your insurance players, SBI Life, HDFC Life, both over there, as are NTPC and ONGC. But largely, you're right, Alex, and the Nifty contributors will show this as well. It's pretty much the Nifty that is pulling the weight and some heavyweights which are pulling the weight.
And the banks look good, right? So ICICI Bank, HDFC Bank, the private sector banks look good. In fact, pull up the Bank Nifty intraday chart because we haven't spoken about that. That index is looking particularly strong. And you had a Citi note earlier today, Tamanna, that spoke about that FCNRB FAQ that clarifies things to a certain extent. It allows banks to charge more. The benefits that they're getting on the statutory liquidity ratios was the cash reserve ratio.
The biggest thing, people who are putting in money in this product, NRIs who put money in this product can take loans against that deposit. So they've just sweetened the deal a little more. So one can expect those inflows coming in.
Particularly for the private banks that have an external facing business, right? So ICICI Bank stands out as one of the key gainers, and that's reflected in trade, the private sector banks.
But believe you me, and these are some of the conversations I've been having, Alex, the public sector banks are equally aggressive in going out and mopping up those deposits. So it's going to be an interesting race to watch out for some of those banking names today. Let's pull up the sectoral heat map as well before we get to the top gainers and losers on the broader markets and take a look at what's happening there. I mean, Nifty, IT all the way. Realty making a smart comeback. Private banks are doing well, as are public sector banks, financial services. So it's pretty strong. India defense. Now, defense stocks, because of specific stocks and some news flow coming in around HAL, etc., Hindustan Aeronautics, etc., has seen a bit of a knock. Can we pull up the India defense constituents and that entire pack? So you'll see MTAR, Data Patterns, Paras, HAL. Actually, most of the pack is down in the red. But having said that, this is also one space which has run up a fair bit. So maybe a spot of profit booking.
Incidentally, we were speaking to an analyst on Paras Defense and the fact that it's trading at 90 times, right? So it's not like it's cheap. A lot of people, those that do have targets, actually have a 46% downside from this point. So it has run up like crazy.
We should pull up the intraday of Paras Defense, because if in case you missed this coverage this morning on NDTV Profit, we did a very detailed and extensive spotlight on it, and we talked about whether there is more legs to go in Paras Defense or it's getting too rich in terms of valuations. So do check out that piece. Let's talk about 3% now. And what else is happening? Here's really the overview of the markets. Nifty has continued to hover around the 24,000 marks. There's been a gain of over 200 points. Half of the gains, though, have come from HDFC and ICICI Bank. 24,100 to 24,150 acts as a strong resistance. Now, in 4 out of the last 6 trading sessions, the Nifty has struggled to cross the 24,100 to 24,150 zone. 23,800 to 23,900 are strong support zones. The rupee is also strengthened after 3 sessions, and buying an interest rate sensitive group is being seen because of the FAQ that the Reserve Bank of India released last evening. Now, benchmark indices are outperforming the small and mid caps. That's also a key factor of what's happening today. And as far as the Bank Nifty is concerned, it's all private banking names that are leading the index, whether it's HDFC or ICICI Bank. Resistance levels for the Bank Nifty at 58,200 to 58,300. Supports at 57,100 to 57,200. We have on the show today Osho Krishan, his Chief Manager, Technical and Derivative Research at Angel One. Dharmesh Kant, Head Equity Research at Chola Securities with us as well. Very good afternoon to both of you. Osho, I'm going to start with you and your take on the Nifty. It seems to be this Bermuda Triangle that the Nifty gets stuck in for a while, and breaking out above it becomes difficult. Do you think that we're set finally to break through?
Very good afternoon, Tamanna. Firstly, thank you for having me at the show. Well, yes, no doubt our market has been hovering within a very strong, tight range. On the lower end, as you were mentioning, 23,700, 23,800 is a very strong support levels. While on the higher end, again, 24,150 is a very strong and a stiff hurdle. So until we see a decisive breakthrough above 150, these levels are not very much comfortable for a long perspective. So I won't be very much aggressive on the long side at current levels. Wait for tomorrow's session if there will be any kind of dip or correction towards the zone of 23,950 to 23,900. That will be a very comfortable levels where I will be having a bullish positions in the market. Well, on the higher end, again, 24,050, 24,100, is a very strong resistance zone. So I won't be having or carrying very strong aggressive positions in Nifty for the time being. But the time Nifty gives a breakout above 150 on a sustainable manner, then from there onwards, the room for next leg of rally will open for Nifty, and on the higher end, 24,450 to 500 will be the immediate target. So that is the overall perspective for Nifty. But for now, buy on dips is the only approach that we are having as of now.
Dips is the only approach. Osho, individual stocks that you're liking, and it seems like there's a little bit of fatigue that might be creeping in at the broader end of the spectrum. Do you see that as well?
Yes, definitely. Today's market is basically be driven by large cap counters. Like all the IT packs have started gaining some kind of positive movement. It's not a reversal, but there has been some positive developments. But the banking and financial, specifically the private sector banks and financials, have been doing very well. But again, for Bank Nifty, the immediate hurdle is around 58,200, 250 odd levels, although the maximum pain is adjusted towards 58,400. So that means from here onwards, we are expecting another 200 points of rally in the banking space. So some of the counters from Bank Nifty or private sector banks are looking quite positive to me. The first one is Axis Bank. It has given a consolidation breakout around the zone of 1370, 75 is the current levels. So I'm expecting that this might see a higher movement towards 1400 odd levels in the short-term period, followed by 1450. So that can be seen as buying opportunity even at current levels, but with a strict stop loss of 1350. While from the financial space, Shriram Finance is looking very positive. Again, 1020, 1015 is the current levels, but overall the technical structure is very positive. So one should try to accumulate positions in Shriram Finance. 990 should be the advisable stop loss, and 1050 to 60 will be the advisable short-term target or intermediate target for Shriram Finance.
Got it. Okay. By the way, update that you might have seen on your screen, on the bottom of the screen, just a short while back. Brent crude now trading very close to that $75 per barrel mark, 75.67 to be precise. But it's good news for the Indian equity markets. Dharmesh, Osho seems to be liking the banks on the technicals. I wonder if that is the case for you on the fundamentals as well, because private sector banks now, today at least, playing catch up. The FCNRB deposits look to be a positive move for them. Would you buy into any of them though at this moment?
Yeah, good afternoon, Alex. I mean, structurally, we have been bullish on the banking space since the announcement of the Q4 numbers. And the only hurdle was that one was the Hormuz issue going on, and the second thing was the impact of the monsoon. This issue, state of Hormuz seems to be resolved as of now. And as far as the monsoon issue is concerned, it's still ongoing, but looks like it's more or less contained, because whatever inputs we are getting from the ground level pan-India basis, the credit demand is very robust. There is no problem out there. Second, the collection ease is also there. There is no stress on the collection efficiency ratio, so money is flowing in, and the traffic on the road is also very robust. There is no slowdown out there. So all these three factors point out to underlying economic momentum. We did see the advanced tax numbers. On the corporate side, they were a very strong set of numbers. Even on the non-corporate side, the advanced tax numbers were pretty strong, 11% kind of a year-on-year growth. So in light of all the macro headline news flow seems to be impacting inflation-led growth trajectory, which has not happened. So that's one structural positive. The second, valuation comfort is always being there with the banks. And as you rightly pointed out, FCNR, will at least keep the NIM stable and with some marginal improvement out there. We are looking forward to NIA growth coming into this Q1 particularly, and the numbers with treasury income gains is likely to be on the upside and surprise all the analysts on the street as far as the stable are concerned. What we have been liking structurally in the banking space on the private sector bank is IndusInd Bank for quite some time. I think it's on the way to its mend, and very valuation, it's like one-time price to book 1 year forward. So with 12-13% kind of a credit growth playing out for FY27, the things will look pretty rosier, and ROA catch-up will be there. Management has guided for that. And the second name is Axis Bank. So these are two banks which structurally we think is on the recovery path. Valuation-wise, a deep comfort for comparables like HDFC and ICICI Bank. And a lot of good work has already been into place. So the benefits will come into Q1 and Q2.
All right, so that's on banks, but let's go to the stock of the day. And stock of the day, one of the top Nifty gainers is definitely Trent. Why is that? The management in their AGM has highlighted a strong growth runway with aggressive expansion plans across formats like Westside and Zudio. Mahima joining us with key takeaways.
Right, so, Tamanna, they start by saying that, right now we're just 2% of the entire market share and there's a strong, growth ahead of us, and that's why, they've given tall targets as well. They've continued to maintain the stance that, they will grow 10x, of which 2.5 times of revenue growth they've already done, 3 times of profit growth they've already done. This they've maintained since 2023, the 10x growth that they're talking about. Store expansion aggressively continues. 50 new Westside store annually is something that they plan to add. For Zudio, it's as high as 200 to 250 odd stores, and for Star Bazaar, it's anywhere between 25 to 40 stores that they plan to add annually. In terms of long-term, expansion story, what they're saying is that Westside has the potential to go up to 700 stores versus 300 stores today, 5,000 stores for Zudio versus of 960 stores today. So, a long way of growth going forward in terms of expansion. The like-for-like growth, the commentary was slightly, from a cautious approach. What they said is that densification and higher productivity of new stores could impact like-for-like growth, but overall, medium term, they're focusing on early double-digit like-for-like growth for Trent. In terms of new business and categories, they said that they will put more focus and fine-tuning in terms of formats like Samoa as well as burnt toast. For new categories, their focus will be in terms of footwear, innerwear, beauty as well as lab-grown diamonds. And both Westside and Zudio will take overseas over time, and they do have good plans when it comes to international expansion as well. Of course, in terms of Noel Tata, who is set to retire as chairman, this was his last AGM, and just to take a look at how Trent has done under his reign. He joined as a board member in 1998 when his mother actually incorporated the company. He took over as the first MD of Trent in 1999. In 2004 is when Trent got listed, and since then the stock is up 500 times till date, and the 10-year CAGR growth has been at that 28% mark. Plus, from 0 to 300 Westside stores today and 0 to 960 Zudio stores today. So that's the growth trajectory that Trent has seen under his reign. Now, if you take a look at the valuations, we've talked about this earlier, 5-year average at 179 times versus current PE at 94 times. Still very high, but less as compared to where, overall 5-year average goes. Lastly, in terms of where analyst recommendation stands, you have 20 buy calls, 5 hold calls and 2 sell calls, with a return potential of just around 4.2% with UBS having the highest target price of 3633 for Trent. So this is the overall view of course, why the stock has been buzzing in trade today and what the future for Trent looks like.
Okay, let's talk about Trent. I want to talk about some of the quick commerce plays as well, whether it's a delivery, whether it's a Meesho, whether it's a Zomato because of that Blinkit play, whether it's a Swiggy. Let's talk about some of them as well. They're all going to be on focus. Eternal today about 1% down, as is Swiggy about 1.5%, 2% down. Now, why am I talking about this entire space? So the Amazon CEO, Andy Jassy, is in India, and they've talked about building India's largest delivery in minutes network. In fact, I want to get to a split screen if we can of Eternal and of Swiggy together and take a look at it. Now this is going to become important because we're talking about the quick commerce space, and really I would say the sleepy giant has entered in a way. This was a conversation we had with the India Amazon chief also a couple of weeks ago, where I asked him in great detail that where were you guys, were you late to the party? And he says, doesn't matter whether we're late or early to the party. The fact is that now we're here. Now the question is what happens when a player of that size comes in, and I think that's what you're going to be seeing on the stock, especially the Eternal and Swiggy one, because they're going to expand their product, which is Amazon Now, to over 300 cities. And it's going to have an ultra-fast delivery service. Now, the point is, obviously the big guys, the big Indian players have done it. What happens when Amazon comes? And
Flipkart as well, by the way.
With this full might. I would say Amazon with Andy Jassy here is the one to watch out for. Yes, Flipkart Minutes is going to do it as well. Others are coming in with Walmart's backing, etc. Not undercutting them in any way. but this is one to watch out for.
Statement of intent, you're saying.
But Alex, they are saying they've already started it. It's more than a statement of intent. They're already in several cities. Nani Jassi's come here now and he's talked about 300 cities, etc. Just want to know what Dharmesh Kant thinks about this and how are you looking at Eternal and Swiggy, especially in light of a statement by Dipinder Goyal recently. I think it was an interview to the Financial Times where he said that we can outspend Amazon if we need to. So more cash burn coming in.
Yeah, Dr. Tamanna, definitely, yes. I mean, last 1 year, our stand has been very clear. I mean, the day Eternal just 300, we had a clear sell rating on the company, and to me, the best of the stock price action for next 3-4 years is already there. The best they can do is survive, give some profit, and keep on trading and bouncing back to those kind of levels. Because this cash money is there, and you're forgetting one more name. Reliance is also into the same business through quick commerce, and they are also eyeing this, because if you see last quarter numbers, the dip in the margin was particularly on account of the quick commerce business, which they have been doing. 60 basis point kind of a dip was there. So these three are great cash burners, and Zepto is again coming onto play. So this entire space, I don't see light at the end of the tunnel as far as meaningful profitability to justify the current valuation multiples. If analysts don't have a choice, they go back and say FY35, 30 times or 35 times the revenue or EBITDA numbers, which is absolutely, I mean, I should not use that word, but one should stay away. At best, you can have technical trading plays.
Which word are you saying you should not use? Is it profitability?
I mean, it's nonsensical, Tamanna, to be very straightforward. I mean, profitability will not come to that extent.
Okay, so what would you do with an Eternal and a Swiggy right now if you own the stock, if you don't own the stock, in both scenarios?
So I will book out, definitely, yes. I will not wait for that 5-10% kind of a pop-up and to take exit. That chance I'm not going to take if I'm owning it. Even if I'm owning it at 300, the best way is to book out. Because a plethora of opportunities outside this world where you can make good money out there.
Tom is coming. Osho on the charts?
On the charts, Swiggy is already at a very strong sell-off position, so there is no buying or staying hold with Swiggy. But Eternal definitely is looking quite positive to me, so I will stay positive on Eternal. The technical perspective looks decent. There has been a kind of attempt, which is failed attempt, but 255 was a very strong resistance. The counter has emerged above it, so I was expecting that the continuation can be seen for a short-term target of nearly 280. So I'm expecting that Eternal chart is looking quite decent, but as of now, looking at all the overall news and the overflows that we are witnessing, there might be some kind of correction, but Eternal comparatively is looking quite better. On the lower end also, from here onwards, the risk reward is quite decent. On the lower end, 245, 240 is a very strong support levels. On the higher end, a sustained move above 255 to 260 can give a room towards 285 to 290 kind of a zone.
Just take a look at the Eternal 1-year chart and the Swiggy 1-year chart. Eternal in the last 1 year has given no returns, 0.40%, nothing. Swiggy in the last 1 year is down 37%. And this is before the storm is hitting. Just because we spoke about Trent as a stock of the day, Osha, I want a quick technical call on Trent.
Trent is looking very positive to me. I would say that this counter has emerged above the 200, the simple moving average, after a very elongated period of correction of nearly 1.5 years. So after 1.5 years, the counter has now surged higher. On the technical charts, there has been inverted head and shoulder pattern, and I'm expecting approximately 3750, 3800 to be seen as the intermediate target. But overall, looking at the recent traction, some kind of profit booking, some kind of correction can be seen, but that should be considered healthy. Any dip towards the zone of 3000 should be considered healthy and should be seen as opportunity to buy. On the higher end, 3750, 3800 is the target, and one should stay bullish in the counter.
What about Trent for you, Dharmesh?
I mean, again, if you look at current valuation multiples, it's trading at 100 times on a TTM basis of PE multiple. So what management is guided for is it's doable. 15 to 20% kind of growth is still possible. Seeing how the other counterparts are doing in different geographies, be it Vishal Megawatt or V2 Retail. So everybody is in the Judio segment where they have been performing. Even DMart Apple business is picking up in the same range. So definitely unorganized to organized play is on, and Judio is the only segment which has done the re-rating for trend. But again, the point here is what kind of a margin you can make by falling into this segment, and over a period of time, if 15, 20 or 25% kind of a CAGR can be there for say next 3 years, 4 years or 5 years time frame, when there will be more competition setting in definitely, because Reliance is also coming in a big way in the similar space across the categories. So having that in mind, how long you are willing to pay 100 kind of a P multiple? So to my mind, it's like 1 or 2 steps up, and then again 1.5 to 2 steps down. So it's likely to stagnate between 3,000 to 4,000 kind of a price band. So not a structural wealth creator as it has been in the past. We don't see that happening in trend from here on.
Dips 3 months back, and you managed to get a 45% pop on the stock. I guess, Dharmesh, what you're trying to say is you might want to take some money off the table. But let's continue to talk about FMCG majors and the fact that they're going beyond staples and soaps, and they're pivoting sharply towards wellness and nutraceuticals with the fast-growing 16,000 crore opportunity that they're all trying to get a slice of. Let's go to Mahima to get a deeper look at the fit and fab trend that is ongoing. Mahima?
Right, so Alex, you know why I've chosen to do this story is because we've seen this pivot, right? Last year, FMCG was all about beauty products. We saw a lot of new products getting introduced, a lot of D2C brand acquisitions in the beauty and personal care. And this year itself, we've seen a lot of acquisitions happening in the healthcare space or the nutraceutical space, as we say. Today, Honasa went ahead and announced acquiring of Fluence Pharma, which is into the same category. And now, a lot of FMCG companies have been doing this, and just to understand as to how big this opportunity is, right? There is rising demand when it comes to beauty from inside products, and you know, as per the Honasa filing, the market for this is as big as 16,000 crores. So every company can have a pie of this. And just to give a perspective as to what are the categories that people are looking at in this and what is the opportunity like, protein is one of the largest growth areas where Marico and HUL are already there. There's women wellness, which is a premium segment where you know, HUL is making its mark. You have beauty from within, which is a high margin business where Marico Zydus is present. There's gut health, which is emerging right now as an opportunity where Dabur and HUL already hold some market share. Healthy aging is a very fast growing category where Zydus is already present. Functional beverages is where, you know, there's mass adoption. So you have Patanjali, Imami, Tata Consumer, etc. in that race. And there's Ayurvedic nutraceuticals, which has an Indian advantage. So you have Dabur, Imami, Patanjali, Zydus Wellness, etc. in this game as well. Now, if you take a look at, you know, different FMCG companies that have different products in this particular segment, you have Dabur, which has Scenes by Dabur, Chyawanprash, Honitus, Real Active. For HUL, they acquired Oziva very recently and has been growing significantly for the company, just like what Minimalist did in the beauty and personal care. Oziva has been doing it in this particular segment. Marico had acquired a stake in Plix in 2023. Recently, they went ahead and acquired a stake in Cosmix as well. Both of them are of the same category of nutraceuticals. Nestle has a JV with Dr. Reddy's, where they have products like Nature's Bounty, Osteo, Biflix, Ester C, etc. There's Imami, where you know, they are focused more towards Ayurvedic wellness products. So you have Zandu, Alofruit, Axiom, Jeevanras, etc., which form a part of their portfolio. Zydus Wellness is where they are focusing more towards preventive health as well as herbal wellness. So they have you know, products under Sugar Free, Nutrilite, Weight World, Max Medics, Right Bright, Complan, etc. And lastly, you have Patanjali, which is mainly Ayurvedic focus and has Chyawanprash, Ashwagandha, Giloy, and nutraceutical capsules under their portfolio as well. So this is you know, just a wave that has probably picked up and something that could become big when it comes to FMCG, focusing on one of you know, this segment called nutraceutical or something within the healthcare space.
Got it. All right. Thanks so much, Mahima, for that. And you mentioned Honasa Consumer. It, of course, has announced that it is entering into the space of nutraceuticals through the acquisition of a majority stake in Fluence Pharma. So what do you need to know about it? It's set to acquire 58% stake in Fluence Pharma. The acquisition is for a 135 crore enterprise value. They will buy the remaining 42% over the course of the next 5 to 7 years. And currently the sales for the target entity are entirely in the B2B space, but they will eventually create a B2C portfolio in the nutraceutical space and scale it up as well. It incorporates the arm Honasa Health for the nutraceutical B2C business. Now, let me go across to Dharmesh just for a quick view on this, and then we'll go to Soumit Sarkar for what is heard on the street. Dharmesh, quick view on this one. Would you change your expectations on Honasa based on this acquisition?
No, Alex, I mean, this space is seeing a lot of traction. The only, caveat out here is in the nutraceutical space, it's left to the judgment of you and me for the certification of the product you are using, and the fashion changes very fast depending upon the last discussion you had with your closest friends. So this product is better, that product is better. So unless it's a structured certification, like in pharmaceutical space, where you know that this medicine is going to be so much effective. So that certification is not there. Somebody else comes with a good branding, advertisement, celebrity status kind of a person, doing the branding for it. And for a few months, that product works. So that's the only challenge in this space, the nutraceutical space. Though it's in fashion, but some certification needs to be there for this growth trajectory to be on a sustainable basis. That's the only thing. Otherwise, Honasa, to my mind, they have done fairly good last quarter. But we are watching it from a distance. And again, here is the same concern is there. The valuation part restricts us from recommending a buy.
Yeah, watching it from the distance is what Dharmesh is doing for Honasa Consumer. Let's go across now to Soumit Sarkar, who's joining us with the chatter from the dealing room. Soumit, very interesting day of trade where the advances and declines have shifted position multiple times. So quite a bit of churn. What are the stocks that the dealing rooms are focused on?
Well, the first counter is Nazara Tech. Now, dealers are indicating that there could be a management change very soon here. The buzz is that the new CEO might come in Nazara Tech. So keep an eye out for this counter going forward. For Tanfac Industries, the company did open their QIP yesterday. Dealers are indicating that the demand has been quite strong, nearly 2 times than what the company was looking to raise, and they have also indicated that a mutual fund and a prominent large HNI has been a buyer in this QIP that was started yesterday. For Shriram Finance, there are buy flows on institutional desk. Both foreign and domestic institutions have been accumulating this counter. Delivery volumes are expected to be on the higher side, and one of the concerns that Q1 could be on the weaker side is not the case, is what dealers are indicating, and in fact they're expecting Q1 to be quite strong for Shriram Finance. When it comes to Central Mine Planning, a recently listed company, dealers are expecting block deal very soon in this counter. At one point of time, the stock was up nearly 5%. It's now up just 2.5% in trade. And lastly, when it comes to Sai Parenterals, there are buy flows on the large HNI and PMS desk is what dealers are indicating. They're expecting a positive news flow very soon when it comes to this counter.
Okay. All right, so that's your daily dose of buzz that you should not miss out entirely. But let's go to what else is moving. Osho, just wondering how you're looking at some of the defense plays that have been drawn down today, and maybe profit booking coming in there, but it's still one sector which is on everyone's radar. Is there anything that you would like to pick up at these levels after the kind of profit booking we've seen?
From the defensive space, yes, as you mentioned that some of the counters are extremely positive, or there has been some kind of traction in the recent period. But overall, there is some kind of lack on the higher or elevated zones. The conviction on the higher end is still lacks in the defensive space, but overall the technical structures are quite positive. So HAL is one of the counter which is still looking positive on the technical chart. It has surged above the short-term moving averages. Today, no doubt, the counter is 3% down, but overall the technical structure is now positive. So I'm expecting that once it subsides or consolidates around the zone of 4,400, then one may look for buying opportunity in this counter. 4,650 is the first target that I'm expecting. Again, BEL is also looking very positive to me. BEL has been into a positive traction last week. In last 2 days, no doubt the counter has seen some kind of correction, but 410, 415 is a very decent zone for accumulating this counter. So one may look for accumulating in cash perspective, and on the higher end, 435.40 will be the short-term target or intermediate target for BEL as well.
Here's what's happening with defense stocks and why HAL is in focus. There are media reports that the core GE F414 engine deal has seen steep price escalations. The GE engine is used for the Tejas LCA. And they're vital, of course, for multiple Indian defense platforms. So the government is looking at alternative supply partners. This might be negative for HAL. That's why you're seeing that 3% knock. But frankly, it's not a huge knock that you're seeing today. Pull up the 1 week chart, the 1 month chart, or even the 1 year chart, and you'll see what HAL has been doing in terms of its performance. And it's been phenomenal, just 2% this week, despite today's knock. Over a month, it's been flat. If you pull up the year's chart, also it's 11% down. Dharmesh, any favorites in the defense pack?
Yeah, Taman, the favorite is the one you have been discussing. HAL is a favorite out there. But this news is definitely worth taking note of, and it's a very sensitive news. Let's see how it pans out. To my mind, I mean, there's no alternative. You have to go ahead with the same engine. And this cost hit, the government of India eventually has to absorb it. There's no walking back from such kind of a structural thing. So let's see how it plays out. But seeing the kind of order book they are sitting on, almost 250,000 plus kind of an order book, which is 6x of the current run rate, and with technology transfer being in place, eventually these engines will be made in India over a period of time, which will be margin accretive. And it's the cheapest company in the defense play in the entire. If you look at the P multiple growth numbers and the margin profile with return on equity ratio, is the cheapest out there. So last 2 years it has not done much of it. But I think going forward, if this issue again resolves, if it is true, then definitely it's in for a big re-rating.
Okay. The other big announcement today came from the Adani Group. Big bets and bold ambitions. That's the message from Adani Group Chairman Gautam Adani at the group's 34th AGM. From positioning infra and AI as twin growth engines to record investments, a massive power push, nuclear entry and scale across ports and data centers. Here are 5 key announcements signaling a high-stakes, future-facing growth strategy. Listen in.
We have the ability to connect every critical layer of infrastructure that is needed to power the age of intelligence. In FY 25-26, we made a record capital investment of more than rupees 1.5 lakh crore in hard infrastructure. To put that in perspective, this represented over 30% of India's total new private sector capital expenditure of the year. At Adani Power, we are implementing India's largest ever private sector power capex program of over rupees 2 lakh crore with a target of reaching 45 gigawatt of capacity over the next 5 years. Our entry into nuclear energy through Adani Atomic Energy is another confident step towards securing India's long-term energy future, with land identified and a 10 gigawatt targeted capacity by 2035. We are positioning ourselves early to serve the growing national demand for clean, round-the-clock power. Adani Ports handle over 500 million tons of cargo in financial year 2025-26, setting an unmatched benchmark for the nation and creating a clear pathway to 1 billion tons by 2030.
All right, so that's the word on a variety of the businesses. By the way, Adani Enterprises are the high point of the day. Morgan Stanley initiating coverage on Adani Enterprises with an overweight rating and a target of 3,638. That's quite the upside even from this point. The stock is up as much as 4% in trade today. What are they saying? They're saying the company is anchored to the new India, India's premier incubator with exposure to multi-decade themes. They forecast EBITDA to scale up by 3 times by FY30. The EBITDA will be driven by airports, new energy and primary industries. FY27, which is the current financial year, marks an inflection point with regard to earnings for the company. They're saying the FY27 drivers are the Navi Mumbai International Airport, as well as the Ganga Expressway, the copper plant, and the new energy capacity expansion. They're also saying that by FY30, they expect the company will handle 145 million passengers across its airports. By FY30, they expect to have a 2 gigawatt DC portfolio as well. So it's quite a bit that is taking place. It's, of course, the airport business as well as the solar module business that is a part of ANIL, as it is called, that forms a part of Adani Enterprises, as well as the copper business, all under that same portfolio. But on that note, I'd like to thank both our guests for joining in, for speaking to us today. Osho as well as Dharmesh, thanks so much for taking the time. But to slip into a very quick break, we'll keep you updated with all of the trading strategies that you should keep in mind as we close trade. Stay tuned for that.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for
Welcome back. You're watching India Market Close, and just a little bit of a taper at the end of trade today for the benchmark Nifty 50, still holding above the 24,000 mark at 24,020. The question is, do we hold that psychological level of 24,000 at the end of trade today? The broader markets, as we mentioned at the start of India Market Close, still underperforming the benchmark, just about a 1/10 or 2/10% of gains for the mid-cap index, similar for the small-cap index, but the breadth looks okay. The market breadth pulled the advanced decline ratio up, I mean, just about edging the declines at this point, but the gap is not very substantial. Shivangi Sarda, analyst equity derivatives and technical at Motilal Oswal, as well as Sudeep Bandyopadhyay, joining in to talk us through the last half hour of trade. Good afternoon to both of you. Shivangi, I'll come to you first. Levels for the benchmark Nifty 50, underperformance by the broader markets, but are you sanguine about the possibility of an up move towards the end of the week for the benchmark?
Very good afternoon, Alex. Thank you for having me. So we've seen that the indices have kind of witnessed a very smart comeback from the lower levels. In fact, the support levels have been respected tremendously today. And it's recouped most of the losses of the previous sessions. And we are kind of holding above 24K levels, which will be important to watch. We are looking at 24,200 and any declines to be utilized for buying. Immediately, of course, 24,200, but positionally, we're looking at 24,450 levels as well. We are entering into the monthly expiry week, so a lot of volatility will be expected here, of course. The support levels to watch out would be 23,850 levels for the Nifty index. Now, of course, we've seen Bank Nifty outperform the broader market, and of course, they have done most of the heavy lifting in this rally. We've seen that this index is mainly led by the private names today because PSU have taken a little bit of a back foot. But the Bank Nifty is looking quite attractive even at these levels with a great amount of follow-up buying. So we're looking at 58,850 next for the banking index with a support of 57,850 levels.
Okay. What about picks this afternoon, Shivangi?
Hi, Tamanna. So afternoon picks, I have identified Indigo, which has seen a good amount of OI spurt today after the consolidation of the last 7 trading sessions. And we've seen that, on the weekly basis as well, this one has kind of bottomed out. And we're seeing, the closing of the session is quite positive near the day's high. So this is one positive trigger. And we are expecting the stock to move upward towards 5,400 levels with the support of 5,100 levels.
Okay. Sudeep, very good afternoon to you. I'm actually going to ask you about Interglobe. Stock has already run up a fair bit ever since crude prices have gone down. And in fact, we should pull up the latest crude rates. They're under $87 a barrel. So all of your crude sensitives are firing up. More distance to go for Interglobe?
Well, looks like that. I think it has recovered all the losses it had since the West Asia war had started, and it's back to levels beyond that. Of course, the crude prices sharply coming down does help, with about 40% of operational cost being crude oil purchases. Definitely helps Indigo when oil prices come down. there are a couple of niggling worries which we have in terms of consumption, demand, and things like that, which getting affected by monsoon not being timely and not being adequate. We'll have to wait and watch this space for that. Otherwise, I think things do look good for Indian aviation as well as Interglobe in particular, who hold 60% plus market share.
Got it. So that's interesting. The question is, Sudeep, and a lot of people will wonder this, it's gained quite considerably, right? Would you advise people to get in at this point? Is the risk reward favorable, or would you wait for better opportunities down the line?
Opportunities down the line. I think it has moved up very, very sharply over the last few days. And at these prices, the margin of error is very limited. Once we have the second quarter numbers, I think there will be a lot of disappointment. Not, practically right, because we know these most part of the second quarter, they were operationally under tremendous pressure because of oil prices being where they were. But still, the disappointment will be there once the quarterly results come out, and things may become a little softer around that time. So probably the time to buy will be then.
Point. All right. Let's talk about the IT sector, though. It is the top performer sectorally today, and it's had quite a bit of chop and churn over the last several weeks, hasn't it? Nobody's able to give you a very clear answer this way or that. Is this something that you can buy at this point because valuations are attractive, or is there downside? There's both a bull as well as a bear case. Let's line that up for you, because Jasmeet is joining in to do just that. Jasmeet, which is stronger? You'll tell us at the end, bull case or bear case?
Well, I'll tell you in the end of it, but let's quickly get to the bull versus bear case. Now, we did have two brokers coming in the morning, where we had Axis Capital, which remained extremely bullish on the overall IT pack, and they have also upgraded the entire IT portfolio into their stock analysis. But we also had JP Morgan's note, which on the other hand, cut a lot of target prices for the counters and see the overall delays in AI going ahead as well, and the pressure continuing. Let's quickly understand the bull and the bear case. Now, for Axis Capital, they see that they did not see any AI-led deflation over the last 3 years, and they see the AI-led deflation is a very small part of the overall growth, and they believe the overall demand has become slower for the IT company. On the other hand, JP Morgan, well, they see the headwinds of the AI have been impacting over last 2 years. This is a year 2 for it, and it also sees that continuing in the coming years as well. While the next bull case is when you look at the overall narrative of AI, well, it expected to create long-term opportunities for Indian IT, but on the other hand, the near-term uncertainties overweighs on the AI opportunities that what we are seeing. Given a lot of counters have been investing in AI regressively, and there are billions of dollars being spent into AI, but enterprises are still at a wait-and-watch mode, where they are not going ahead with the order proposals, given they still want to see how can AI really change the overall narrative. That's why the demand has been slower. When we look at the other key aspect, the AI is expected to create new technology spending, while the AI uncertainty is delaying the overall enterprise tech spending altogether, which we have analyzed. Further, if you look at the next bull case, we also make a note that the overall AI needs IT firms for implementation. That's what even Nilekani yesterday told, that there's a huge gap between AI models and what actually enterprises can do. So we need IT companies as a service integrators. But on the other hand, AI is expected to reduce the demand for traditional service. Now, how much demand of the AI will really replace that is something to wait and watch. And even that's a major overhang that's been continuing. We look at the other bull case. Well, we expect AI could improve overall margins for IT companies, because they start doing a lot of work with AI and they reduce the overall employee cost. But on the other hand, the revenue growth also becomes a key question for the IT tech. Given a lot of work which can be done by AI models, then they won't be charging onto the fixed case model where they generally charge for each employee. We look at the other key aspect, we do note that all of this bull and bear case brings up to the same question, which one is winning. But as of now, it's a wait and watch. A lot of people expect in next couple of years, we would see the turnaround for the IT industry, but still, it's just wait and watch in the industry altogether.
You know, Jasmeet, I think you are brave to do a bull versus bear on the IT sector, simply because nobody is understanding what to do with this sector. Even top investors have come on the channel and said, we're confused about it. And nevertheless, I'm going to ask Sudeep what he thinks, because it's one step forward, 2 steps back, even in the way the IT index behaves, isn't it, Sudeep?
Well, I've been consistent in my view, Tamanna. I think we should avoid IT. The AI disruption is real, and we are probably seeing just the beginning of that. Well, there are arguments that Indian IT companies and IT service companies in general will be
they wants to implement the AI tools for large corporates and things like that. But I think it's a period of tremendous turbulence and readjustment for IT services companies. They will do that, and I'm sure that transition will take some time. Whether it's going to be 1 year or 2 years, I'm not sure. But this 1-2 year will be a period of extreme turbulence. Revenues will be under pressure, profitability, margin, everything will be under pressure. And it's extremely difficult to predict who will be successful in pivoting their business towards AI implementation and things like that. So I would rather err on the side of caution and stay out of this entire IT pack at this stage. Let's wait and watch how things move. And again, I would repeat that we are seeing the trailer, just the trailer of the AI-led disruption. Much more is expected to come over the next 1 year to 1.5 years. So wait and watch would be my policy.
Wait and watch, yeah, absolutely. And I guess the jury's out on how earnings will be affected, how much AI contribution comes through, how the reporting of that is going to take place, etc. And whether the purchases that have been made by some of these frontline IT companies will really bear fruit in the short term. Let's shift focus though to another sector, and this is the textile space where stocks have been rallying. Stocks like Indocount, KPR Mills up as much as 10% in trade. Jasmeet is still with us and he's here to explain why these stocks are rallying. Jasmeet?
Well, Alex, thank you for that. We are talking about two separate stories where Nifty IT is down about 30% over the last couple of years. And now we have textile, which have been rallying in trade, and some of the counters are up nearly 70 to 90% over the last couple of months. Let's quickly understand top 5 key triggers of why textile stocks have been buzzing over the last couple of months. Well, the first one, overall US apparel inventory has normalized after 3 years of correction. Well, this has happened when the extreme level of demand popped up after post-COVID, and it nearly took 3 years for them to clear the inventory. And now we are expecting a good demand turnaround for textile sector. While the second one and the major one, the overall US tariff hang is easing for Indian, given earlier we had double amount of tariffs, but now given the easing of the tariff is something that's rallying the overall sector. We look at the third part, we also make a note that India currently enjoys tariff parity when you compare to the other competitors when you look at Vietnam and Bangladesh. So that becomes a key positive trigger that US clients can prefer Indian textile companies over the other counters. When we look at the fourth trigger, we also have a lot of FTAs been signed across countries, which is again boosting. Recently, we spoke about the UK and EU FTA, which could again bring back new trade deals for the counters going ahead. While the last one and the last positive key trigger for the particular counter is the global brands are accelerating China plus one sourcing shift, which basically means they don't want to put the eggs in the same basket and they don't want to really focus on one country for outsourcing, and they're moving away from China. So China plus one basically means China plus India, and that's why Indian textile companies becomes beneficial. While the last one, the government has been investing in the textile scheme in terms of PLI and other paybacks, given that they have been driving massive expansion, and they're also getting a lot of plans for Indian textile so it can promote globally. Now let's quickly understand what's the way about and where can we expect the overall textile space going ahead, the key outlook. When we look at the new capex has been focused on the garment sector, and a lot of capex has been happening towards premiumization, which is creating higher margins for textile counters. When we look at the second key aspect, we also make a note that the better order visibility and the support is something that's boosting the overall stock. Let's really pull out the chart of the overall stock and let's see how much they have grown over the last couple of months. When we look at the counters like Indocount and Arvind and Welspun, they have gained nearly 92 to 56% over last 1 month, and today they're up nearly 10 to 5%. When we look at the last two counters, we also have KPR Mills, Pearl Global and Trident, which is again up nearly 50 to 20%. So all in all, we do see a positive turnaround for textile companies, but it's a wait and watch. How does the Q1 pans out and how does the earnings start showing up given the stock performance have already rallied?
Good point. On the technicals first, the question is, what would you do with some of these counters? Particularly, for example, KPR Mills, it's up as much as 10% in trade today, Shivangi.
So looking at KPR Mill, today we've seen, of course, a price volume surge here, but then again, it's cooled off from its day's high and quite significantly for that matter. And we've seen that the stock is kind of settling below its resistance levels as well. So this one would be a little wait and watch here. Of course, there was a lot of euphoria and with the price surge today, but this needs to sustain here above the 1200 levels to again, sustain in this upward sloping channel.
Since it's 3:21, let's get a quick BTST, before we move ahead. I know you gave your picks a short while ago, but looking at where the charts are right now, and we're seeming like we will close at the high point of the day. A strong move up in the last few minutes or so, maybe Brent falling to the lowest levels since May 2nd has helped. But any BTST ideas that you would like to add on? Shivangi?
So for BTST, I have chosen Bajaj Finance, which is giving a kind of a bullish engulfing candle formation on the daily frame. And it has also surpassed its previous hurdle zone, which was met nearly on 7th May earlier. This year, beg your pardon. We've seen that this stock is showing positive divergence on the RSI front as well, and looking quite positive. The closing is giving me an indication that the volumes are going to add up and continue with momentum. So 1020 is what I'm looking at for Bajaj Finance next, with a support zone of 970 levels.
Okay, Sudeep, quick view on the textile space. Given everything that my colleague just presented, there's also the aspect of the GST changes on non-cotton. So if the blends of some of these synthetic yarns goes up in some of these textile companies in the way that they make their product, they could see benefits on the margin front, wouldn't they?
Oh, absolutely. You're right. There are small multiple changes which the government did affect over the last 6-8 months, which is going to benefit these companies. But I think the biggest benefit, of course, will come from these FTAs. The FTA with UK has already come in place. EU is expected by the end of current calendar year. And at some point of time, we'll hope that the FTA with US also gets done. So I think we are in for good times as far as these companies are concerned. But remember one thing, the competition of these companies is predominantly with Bangladesh, Vietnam, and countries like that. It's not with China. So we have to be very careful of what kind of deals Bangladesh, Vietnam is getting with these respective geographies like UK, EU, and USA to understand the relative competitive position for our companies of Indian origin. And that needs to be monitored on a continuous basis. Amongst these companies, we do like Wellspun Living. I think it's got a significant potential. KPR was a favorite, but I think at this level, I would recommend a buy because it's already moved up quite a bit. One can look at Arvind as well from a long-term perspective.
Okay, let me go quickly across to Parth. Just about 6 minutes left to go. Parth, what are the stocks buzzing right at close?
So there are three really interesting stocks that I've brought along. The first one is Pearl Global Industries. The stock has gained over 25% in the last 5 days and has hit a new all-time high today. The stock is up over 10% today, which is the biggest single-day gain the stock has seen since May 2026. Also, the volumes today are 12 times its 20-day average. The second one is IRFC, which is down over 5.5% today, which is the biggest single-day fall the stock has seen since March 2026. The stock is now just 7% above its 30-month low, and volumes today are 5 times the 20-day average. The reason behind today's fall is that government has launched an OFS in the company to sell around 2% stake at 91 rupees per share, which was a 9% discount to yesterday's closing price. And lastly, I have Sanstar, which has gained almost 20% in the last 5 days, hitting a new 17-month high. And at the levels it was earlier today, now the stock has obviously seen some profit booking. It was the biggest single-day gain for the stock since July 2024, and volumes today are also 11 times the 20-day average. So these are the three stocks that you need to keep in your watch.
Okay, I want to get a take on IRFC. Sudeep, I want to come to you. After that OFS news, of course, you had a bit of a dampener on the stock, but do you see a potential here?
Well, the railway stocks, at the kind of levels where it went was unsustainable. There has been significant correction, and I understand amongst the railway stocks, IRFC, because predominantly it's into financing and the opportunities are humongous. They have also ventured into non-railway related financing. So I think from a long-term investor, if somebody is getting at 91, which is the retail OFS price, it may not be a bad deal if they are willing to wait for 1 year plus.
Got it. Okay. What about the charts then, Shivangi? If I extend this not just to IRFC, but beyond that to the railway plays, what would you say?
See, very honestly speaking, railway pack has been a very lackluster one from the last 2 years. It's underperformed, and it's clearly in the bottom of this entire rally. We've seen that these stocks have kind of made attempts of recovery, but failed to hold at those levels. And for me, I think railway stocks would be a little wait and watch for now, not on the radar as of now.
Okay. One top call, Shivangi, before we wrap up for this afternoon.
So one top call for you, Tamanna, will be Oberoi Realty. We've seen that, from the OI addition in the last 2 sessions, this one's looking quite positive. With getting ready for a consolidation breakout of the last 11 weeks, this stock is kind of, getting ready for a fresh leg of rally here. So this would be my take for the next targets of around about 1800 immediately, and then 1850 little positionally. 1700 would be important support to watch out.
Okay, thank you so much, Shivangi and Sudeep, for joining us on this leg of the show as we wrap up. 24,050 continuing to be a tough nut to crack. Pull up the intraday of the Nifty, and it's quite interesting to see that broader markets have zoomed up while the Nifty's come off its high point of the day. Let's pull up the Nifty contribution chart and the heat map very quickly so you'll see what's happening there. Bharti Airtel is one of the key losers in the closing session. Can we pull up the intraday for Bharti Airtel just for a bit, because NTPC, Maruti have also joined in, some of that auto pack coming in. Yeah, you've seen that dive in Bharti Airtel, which has pulled down the Nifty to some extent. It has fair amount of weightage, but if you look at the heat map of the Nifty, you still have Indigo there, I presume leading the charts, 5% up. This has been a great day for Indigo. Trent, Adani, Ent, Tech Mahindra, Bajaj Finance and Infosys, some of the winners, but it's the banks which really are eye-popping, isn't it, Alex?
Yeah, not very often in the recent past that you've seen both HDFC Bank and ICICI Bank in the top list, in the top 10 gainers, but TCS also making its way there. Infosys and the IT pack doing particularly well, about 20 stocks in the red, and the worst performer, of course, Bajaj Auto. Of course, in the automotive pack, watch out for the buyback is being eyed very closely, as well as NTPC in the power space, Tata Steel, the entire metal pack losing ground. ONGC, of course, this is something that is going to be sensitive to crude oil prices, and if crude oil prices are cooling off, it's not necessarily the best news for an ONGC, but I think it's more or less what we saw through the day. Some strength building for Indigo, and some money being taken off the table for Trent at the end of the day.
But it's really the broader markets that have zoomed up and performed well, right? Let's pull up the small cap and the mid cap before we go to the advanced decline ratio. Actually, the Nifty mid cap looking completely flat. Let's see what the small cap stocks are doing and whether there's action there. It's pretty decent there. That's seen a bit of a climb. Let's pull up the advanced decline ratio and see if that has changed significantly towards close. Not really. In fact, narrowed down. So you have certain winners that have come to the fore more than anything else. The sectoral heat map is the next thing that we will see. We just have about 7 seconds left for markets to close. Look at the Nifty realty stocks. Oberoi Realty was one final call from Shivangi Sarda as we went into close. Nifty IT right there on peak. Private banks and the entire bank Nifty also doing well. So it's banks, IT and realty, which is really moving up the markets. Everything else is kind of middling.
Yeah, in fact, I think this is something that we will talk about tomorrow at the start of trade as well, because Nifty Bank has been a technical call vis-a-vis the Nifty. And of course, the Nifty 50 did climb today, but it's an outperformance. Last week, all of last week, there's been a relative underperformance by the Nifty Bank. I wonder whether now you will see an up move, because we're ending very close to the high point of the day, and tomorrow is the weekly expiry for the Sensex. Let's see how that pans out.
Keep an eye for that. There will be a detailed statement on what's happened between US and India on the trade deal. That's going to be an important one as well. So all of the action continues, but for now, from Alex, me and the team that put the show together, that's all the time we have. Thank you for watching. Stay tuned to NDTV Profit.
Hello and welcome to NDTV Profit. You are tuned in to the Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin slips below the $63,000 mark on tech sell-off. Tech firms lobby Senate for Clarity Act. Morgan Stanley buys Bitcoin amidst June sell-off. MiCA deadline forces crypto firms to exit. Well, the first one, Mythbusters, the crypto operates outside the system, is one of the most common misconceptions about the crypto, that it operates completely outside the financial system. But that's a myth. Crypto has become increasingly interconnected with the broader financial system. Now let's take a look at stablecoins. That's an example. Stablecoins are digital assets which are designed to maintain a stable value, often being backed by traditional assets such as US dollars or short-term government securities. Now, looking at the major asset managers, banks, payment companies, and even publicly listed firms are now actively involved in the digital assets. From Bitcoin ETFs to tokenized financial products, crypto is increasingly being integrated into regulated financial infrastructure. Now, regulators around the world are also bringing crypto within established legal and compliance frameworks. Even in India, crypto platforms operate within regulatory requirements such as KYC verification, tax reporting, and even transaction monitoring. So, the next time someone says crypto operates outside the system, remember, crypto may have started as an alternate to traditional finance, but today it is increasingly connected to the global financial system rather than being separate from it. Now, as we wrap, remember, you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about the crypto regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes on CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that's going to get you a roundup in terms of everything that has happened thus far in the next few minutes. But first things first, let's kickstart the show by talking about markets. Then Bilal Street ends with a strong bounce back as benchmark indices finished near the day's highs, while the Nifty reclaims the 24,000 mark, while the Sensex surges more than 700 points as well, driven by broad-based buying across sectors. Let's also talk about the sectoral trends that remain tad bit mixed at the close. Now, realty and IT stocks led the advances, while defense and some of your energy names were under a little bit of pressure, reflecting a rotation of flows across sectors as benchmarks ended the day on a strong note. Moving on then, let's talk about Honasa Consumer that is expanding beyond its core beauty and personal care business with a foray into nutraceuticals. The company is going to be acquiring a 58% stake when it comes to Fluence Pharma at an enterprise value of 135 crore rupees and plans to buy the remaining stake over the next 5 to 7 years. Now, the company has also incorporated Honasa Health as it looks to build a consumer-focused nutraceuticals portfolio and tap new growth opportunities. Let's also move on and talk about Pearl Global Industries that extended its sharp rally as when gaining more than 25%. As you can see on your screens, about 10% uptick coming in just today, but 25% over the past 5 sessions, scaling a fresh all-time high as well, and trading activity really remained elevated, with volumes jumping to 12 times the 20-day average. The stock also recorded its biggest single-day gain since May, reflecting strong momentum as well as heightened investor interest in the counter. Let's move on and talk about IRFC shares that came under sharp pressure, as you can see, with that 6.5% thereabout, almost 7% knock coming in on this particular counter, after the government announced an offer for sale to divest up to a 2% stake in the company. The stock is now less than 7% above its 30-month low, while trading volumes jumped to 5 times the 20-day average as well, and the decline also marked the company's biggest single-day fall since March 2026. Let's also talk about Oberoi Realty that gained after the developer secured RERA approval for its maiden Gurugram project as well. So about 3% uptick coming in when you talk about this particular counter, and the clearance is really paving the way for launch and sales bookings, giving the company a strong entry into the Haryana market as well, spread across nearly 15 acres. You do have this particular luxury development that's going to be featuring low-density, hospitality-backed residences inspired by Mumbai's iconic 360 West project. Onto the word coming in from brokerages this time. Let's talk about Syngene that was up about 2% in trade. Macquarie has maintained its outperform rating and is quite bullish, even though they've cut the target price just a tad bit, citing some of the headwinds in the CDMO business. Now, however, you do have the brokers really believing that the recent stock correction has already factored in some of these challenges and is underappreciating the company's medium-term growth levers. Also sees stronger commercial execution and higher utilization as some of the key drivers of improved profitability and returns going forward. Let's move on and talk about Tata Power that has received a key regulatory boost after the Power Ministry extended the validity of its Section 11 directions. So some bit of profit booking that you saw coming in for this counter after the extension of the directions for the Mundra Ultra Mega Power Project until September 30th. Now, the extension mandates the 4,000 megawatt plant to really continue operating at full capacity to meet high seasonal electricity demand. The order also ensures cost plus tariff compensation, providing revenue visibility for this particular company. And Mundra, which houses about 5 units of 800 megawatts each, supplies power to Gujarat, Maharashtra, Punjab, Haryana and Rajasthan. Let's also move on and talk about City Union Bank that has approved a framework to raise up to 500 crore rupees through the the QIP route, in fact, and the fundraising plan comes at a time of leadership transition at the bank, with R. Vijay taking charge as the new CEO from May 1st. The capital raise is also expected to strengthen the bank's balance sheet and provide additional firepower to support its growth plans going forward. Let's move on and talk about Yes Bank, that is scheduled a board meeting on June 29 to review a wide range of fundraising options. The lender said that its board is going to be considering raising fresh equity or hybrid capital along with borrowings through the issuance of eligible debt securities. The move is coming in as the bank evaluates multiple avenues as well, and that's something that you're looking at in terms of the important update coming in to strengthen its capital base and support future growth requirements. Let's move on and talk about Ramco Systems, that was in focus after the stock hit its 6-month intraday high, surging more than 15% with trading volumes really spiking to 17 times its 20-day average. The enterprise software company has gained 35% in the past month and over 60% in a year as well. Operationally, FY26 saw revenue growth driven by accelerating recurring income, while EBITDA margin expanded sharply to 24% from 14% a year ago. Management has also highlighted its payroll business as a key growth engine and launched its agentic AI platform for enterprise automation. Let's move on and talk about shares of Interglobe Aviation that climbed to a 5-month high after gaining nearly 15% over the past month. The rally has been driven by optimism around strong passenger traffic growth, improving operational performance, and a favorable outlook when it comes to the aviation sector. Let's move on and talk about TCI Express shares that surged about 15% in trade, 16.5% at close as well, marking their biggest intraday move in more than a year. The rally is coming in after the company reported its highest quarterly volumes in 24 quarters, with Q4 freight volumes rising 4% on a year-on-year basis. The SME segment now contributes 48% of revenue, with management really targeting a share of more than 50% as well. Investors are also betting on capex-led expansion and improving margins in the next phase of growth. Let's move on and talk about Bajaj Auto as well, that came under sharp pressure, about 2.5% knock coming in on this particular account after the company really disclosed a ransomware attack that impacted its systems as well as those of its tech unit. Now, the automakers said that it's swiftly implemented precautionary protocols as well, and that the mitigation measures have been effective so far. The stock also remained in focus as June 23rd, in fact, was the record date for its buyback of up to 46.94 lakh shares, and that's also a key update that you're looking at. Moving on then, let's get you some business news. Gold and silver prices have witnessed a sharp correction in 2026, with spot gold plunging nearly 24% from its January peak, while silver has also recorded the steepest decline coming in 4 years. The sell-off has been driven by a stronger greenback, expectations of high interest rates, and easing safe haven demand. Moving on then, let's talk about a rare move. Canada's Fairfax Financial has purchased nearly $1 billion worth of Indian government bonds through its local unit, Fairfax India Holding Corp. Reports, in fact, are suggesting that the investment could be linked to Fairfax's interest in acquiring a stake in IDBI Bank as India's privatization process gathers pace. The transaction comes after India's decision to exempt foreign investors in government bonds from capital gains tax, making such investments even more attractive. On to some national news now. A major rescue operation is currently underway in Kolkata's Taratala area after the roof of an under-construction warehouse collapsed. More than 30 people are feared trapped under the debris. Several workers were inside the 3-story structure when the roof gave way and locals initiated rescue efforts before police, fire service personnel, in fact, and disaster response teams reached the site. So far, 6 to 7 people have been pulled out while search and rescue operations continue. Moving on then, Mumbai remains in the grip of heavy monsoon showers after intense overnight rainfall battered the city and its suburbs. Parts of the metropolis recorded over 200 millimeters of rain, and that's in just 24 hours, disrupting suburban train services and forcing the closure of schools. The IMD, in fact, has forecast more spells of moderate to heavy rain, thunderstorms and lightning over the next 24 hours, keeping the city on high alert. And a shocking incident has rocked Mumbai's suburban rail network. A 22-year-old commuter was allegedly stabbed to death inside a first-class compartment of a churchgate, Nalasopara East past local as well, after an argument over whether the train doors should be kept open during the race. The attack took place between Andheri and Borivali stations. The accused fled the scene, and a manhunt is currently underway as police investigate this assault. Moving on then, let's talk about a major breakthrough coming in the Ketan Agarwal murder case. Pune police have in fact arrested his fiancée on charges of allegedly plotting and executing the killing. Investigators claim that the accused was involved in the conspiracy behind the murder, with evidence gathered during the probe leading to the arrest. Police are continuing their investigation to establish the motive and identify any other individuals who may have been involved. Moving on then, let's talk about authorities in Assam that are on high alert after torrential rainfall triggered flash floods in the state. In terms of one particular district as well, and the heavy downpours led to a sharp rise in river discharges, raising concerns of downstream impact in several districts of the state. Flash floods have also been reported near the Panur Lower hydroelectric project, where a spillway gate has been opened to release excess water and manage surging flows as well. Moving on then, let's talk about some international news. Southeast Asia could face a renewed bout of severe transboundary haze later this year as El Nino-driven heat and dry weather raise the risk of widespread forest and peatland fires as well. And you do have experts really warning that prolonged dry conditions may worsen air quality across several countries, disrupting travel, public health and economic activity. Governments in the region are closely monitoring hotspots and preparing mitigation measures ahead of the peak fire season. Let's move on and talk about Amazon CEO Andy Jassy, who's on a visit to India as the e-commerce giant really sharpens its focus on one of its fastest growing markets. During the visit, the company announced plans to expand its quick commerce network to 300 cities, significantly increasing its reach in the fast delivery segment. The move underscores Amazon's commitment, in fact, to strengthening its logistics infrastructure and competing more aggressively in India's booming quick commerce space. Moving on then, let's talk about reports suggesting that in a significant diplomatic development, Iran's president has reportedly invited PM Modi to attend the funeral of Supreme Leader Ali Khamenei as well. The invitation comes amid a period of heightened regional attention on Iran and its leadership. There has been no official confirmation yet in terms of New Delhi regarding the PM's participation in the ceremony. Moving on then, let's talk about Elon Musk, who's lost his trillionaire status after a sharp week-long sell-off when it comes to SpaceX shares that wiped out nearly $500 billion from his fortune already. The decline is coming in after Musk's net worth had surged to record highs, driven by soaring valuations across his business empire. Moving on then, let's talk about the world of sports. England and Ghana played out a hard-fought, goalless draw in their FIFA World Cup 2026 group L encounter, with both sides sharing the points in a tightly contested match that you're looking at. Despite several chances at either end, neither team, in fact, was able to find a breakthrough. The result keeps the qualification race wide open, with both teams remaining firmly in contention for a place in the knockout stages. And Ronaldo delivered another record-breaking performance at FIFA World Cup 2026, scoring twice as Portugal thrashed Uzbekistan 5-0 in a dominant Group K display. Brace, in fact, added another milestone to his illustrious international career, while Portugal strengthened their position in the race for a place in the knockout stages. The emphatic victory, in fact, underlined Portugal's title credentials as the tournament really gathers momentum. And big bets and bold ambitions, let's talk about that as well. That's the message coming in from Adani Group Chairman Gautam Adani at the group's 34th AGM, from positioning infrastructure and AI as twin growth engines to really record investments, a massive power push, nuclear entry, and scale across ports and data centers. Here are 5 key announcements signaling a high-stakes, future-facing growth strategy. Let's go across and listen in.
We have the ability to connect every critical layer of infrastructure that is needed to power the age of intelligence. In FY 25-26, we made a record capital investment of more than rupees 1.5 lakh crore in hard infrastructure. To put that in perspective, this represented over 30% of India's total new private sector capital expenditure of the year. At Adani Power, we are implementing India's largest ever private sector power capex program of over rupees 2 lakh crore with a target of reaching 45 gigawatt of capacity over the next 5 years. Our entry into nuclear energy through Adani Atomic Energy is another confident step towards securing India's long-term energy future, with land identified and a 10 gigawatt targeted capacity by 2035. We are positioning ourselves early to serve the growing national demand for clean, round-the-clock power. Adani Ports handle over 500 million tons of cargo in financial year 2025-26, setting an unmatched benchmark for the nation and creating a clear pathway to 1 billion tons by 2030.
Alright, then that's all that we could pack for you on this edition of Market Express. Thank you so much for tuning in.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear.
Market ends higher as street claws back from yesterday's losses. Nifty springs back from support and ends above 24,000 mark into global aviation, and Adani Enterprise tops the chart. Broader markets underperforms the benchmark. Rupee ends higher as asset classes across Asia recover from Tuesday's slump. Currency back at 94.66 per dollar mark. 2036 bond yields ends at a 3-month low. Navratna PSU IRFC hits the block with the government planning to sell up to a 2% stake through an offer for sale to boost disinvestment proceeds. Sources tell NDTV Profit that the Cabinet Committee on Economic Affairs may approve landmark 26,000 crore rupee Emirates NBD RBL Bank deal. Emirates NBD to acquire a 60% stake in the Indian private lender. From resilience to record investments, Adani Group Chairman maps an aggressive growth roadmap betting big on infrastructure, digital platforms and scale to power India's next economic cycle. Commerce Minister Piyush Goyal and US Trade Representative review progress on India-US deal talks, explore avenues to deepen economic ties and push momentum towards a mutually beneficial interim agreement. A defining chapter closes at Trent, with Noel Tata stepping down as chairman after almost 30 years, marking the end of a transformative leadership journey. Mumbai woke up to relentless showers as the IMD sounded a red alert for the city, and Palghar warning of intense rain, thunderstorms and gusty winds as the monsoon stepped up its fury. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But first up, let's see how the markets have really fared today, viewers. So the Lal Street has ended with a strong bounce back as benchmarks indices have finished near the day's high. The Nifty reclaims the 24,000 mark, while the Sensex surges more than 700 points, and this has been driven by broad-based buying across the sectors. My colleague Parth is joining us with a complete market roundup.
Nifty has closed in green, up almost 0.8% today, led by Indigo and Adani Enterprises. Indigo has hit the highest level in 7 months, up almost 5% today, and Adani Enterprises also gained over 3.5% today. On the other side, broader markets have, however, underperformed the benchmark, with Nifty Midcap 150 closing flat today. The top gainers in Nifty Midcap 150 were JSW Infra and KPR Mill, both of which saw an uptick of over 7%. On the downside, we saw GE Vernova, TND and Hitachi Energy, both of which were the top losers in the index, down over 6% today. On the other side, Nifty Small Cap 250 has ended in green, up almost 0.2% today, led by Credit Access and Jyoti CNC Machines. Credit Access gained over 6% today, while Jyoti CNC saw an uptick of 5% today. On the sectoral side, we saw all of the sectors end in green except Nifty Metal and Nifty Auto. Nifty Realty was the top gaining sector of the day, up almost 2.2%, led by Brigade Enterprises and Phoenix Mills, both of which were the top gainers in the index, seeing an uptick of 3.3%. On the bottom side, we saw Nifty Auto being the top losing sector, down almost 0.5% today, led by Bajaj Auto and Tube Investments, both of which were the top losers in the index, each down 2.7% today. On the sectoral trend side as well, Nifty Pharma has ended in green for the 5th day in a row, while Nifty FMCG has snapped its 3-day losing streak. Also, Nifty Metal and Nifty Auto have closed in red for the 2nd consecutive day.
Thank you so much, Parth, for that. And viewers, the rupee is trading with a mild positive bias today as it closes at 94.66 against the dollar. Now, this is supported by the sharp correction in the global crude oil prices. Brent has slipped to around $75 per barrel mark, while WTI is trading below $72 and extending the losses by almost 2% each. And the decline in oil is easing concerns over the India's import bill, which in turn is lending support to the domestic currency. Now, softer crude oil also reduces inflationary pressure expectations and also improving the sentiment for the rupee in the near term. However, traders continue to stay cautious as global macro cues, dollar strength, and even the foreign fund flows remain key drivers for the direction. Meanwhile, viewers, months after the government has allowed 100% FDI in the insurance sector, sources tell NDTV Profit that insurance regulator has received applications under the new regime. And my colleague Shrimi is joining us with more details on this.
Well, that's right. India's opening up of the insurance sector to 100% FDI is beginning to see strong interest from the global insurers. What we are picking up is that IRDAI insurance regulator has received 3 to 4 applications from foreign insurance players seeking approvals for acquisition, joint venture and ownership restructuring under the new FDI regime. In fact, among the these proposals under review is Prudential's plan to acquire 75% stake in Bharti Life Insurance. Also said that regulator has received this application last week itself and said to be examining the proposal, including the implication of Prudential's existing stake in ICICI. So under the current IRDAI norms, Prudential may have to reduce its holding in ICICI below 10% of the transaction proceed, as the current rule won't allow them to actually hold majority stake in 2 insurance entities. Now, sources further indicating that a handful of global insurers are already in discussion with Indian counterparts and are expected to announce partnership, acquisition and even the stake increase over the coming quarters. In fact, some preliminary queries have already been made to Department of Financial Services under Finance Ministry, and that indication is quite positive as they are seeking some sort of changes in their ongoing talks. Now, given the interest emerging in the sector, industry expects significant changes this fiscal year itself. Just to underline, the space already been buzzing in the recent past. For example, Alliance has announced a strategic partnership with Jio, Piramal Group and Shriram Group are exploring life insurance venture as well. Mahindra and Mahindra Manulife are also in active discussion. So overall, government officials expect the liberalized FDI regime to attract a lot of fresh capital, and as a result, a lot of action expected in the coming quarter.
Thank you so much, Rimi, for that. In fact, viewers, the Cabinet Committee on Economic Affairs is expected to meet today to consider a landmark banking transaction involving Dubai-based Emirates NBD and RBL Bank. So the deal, valued at around 26,000 crore, involves Emirates NBD acquiring a 60% controlling stake in the Indian private sector lender. And if approved, this would mark the largest ever foreign direct investment in India's banking sector and also the first instance of a foreign banking entity securing majority control in a listed Indian commercial bank. So the transaction announced last year has already cleared key regulatory approvals and also includes a preferential share allotment, which is a mandatory open offer to minority shareholders, and also the integration of Emirates NBD's existing India operations into the RBL Bank. And viewers, from betting big on India's future in a fractured global environment to building scale amid intense scrutiny, Adani Group Chairman Gautam Adani lays out a clear vision at the group's 34th AGM. Now, to walk us through the key highlights, let's get in my colleague Puneet.
Well, what were some of the key important quotes as well as key takeaways coming in from Chairman Gautam Adani's statement at the annual general meeting of 2026? Now, he went on to mention at the start that it was a year in which the world grew more fractured, complex energy security models also returned to the center of national strategy, and technology became inseparable from sovereignty at this point of time. However, even in the face of these challenges, the Adani Group remained anchored to an unwavering belief that India's future cannot wait. While others debated, Adani Group built, advancing its journey as the world's most integrated infrastructure platform across energy, transport, logistics, and industrial manufacturing, was one of its key quotes coming in from Chairman Gautam Adani at this point of time. Well, he also went on to mention some key important takeaways from the year gone by. Progress did not come in calm conditions, he highlighted, for the Adani Group in this year. Also, it came in the middle of extraordinary scrutiny in this year as well. Now, we have seen that apart from that, also one of the biggest examples, according to him, was the belief on the 25,000 crores rights issue that was done earlier this year. And, this was more than a capital event. He saw it as a referendum on the credibility of the Adani Group. And in quotes, he mentioned, and true to its spirit of nation building, the theme of the address this year focuses on accelerating infrastructure and leveraging intelligence as well. Now, he mentioned that these are no longer two separate priorities, but they are twin global engines that must shape India's strength infrastructure. Apart from that, also, the first engine, of course, for national growth, infrastructure, which includes roads, ports, airports, infrastructure, as well as includes the key infrastructure like translines, gas networks, data centers, as well as digital platforms. Now, apart from that too, he spoke of the second engine as well, which includes all of these key aspects. But when you look at FY26 as a year, the Adani Group made a record capital investment of more than 1.5 lakh crore in hard infrastructure. Now, this also represents roughly 30% of India's total new private sector capex for the year of FY26 as well. Shows you the size of the magnitude of things that have happened in the last year. Now, of course, national security is precedent, and during Operation Sindoor, Chairman Adani also mentioned that the drones, anti-drone systems, missiles and ammunitions by the group was also supporting the armed forces when it mattered the most. When you look at the financial numbers, FY26 consolidated portfolio revenue came in at 2.92 lakh crore rupees, while the FY26 EBITDA reached 94,834 crores. The net debt to EBITDA, also at 3.3 times, is less than the group's target of 3.5 times as well. And at the end, he mentioned that to build infrastructure that powers India and to build institutions that ensure human dignity at every level of society, end quote, were some of the key highlights and the key takeaways from Chairman Gautam Adani's statement at the AGM.
All right, Puneet. So big bets and bold ambitions. That's the message from Adani Group Chairman Gautam Adani at the group's 34th AGM. And from positioning infra and AI as twin growth engines to record investments, a massive power push, nuclear entry, and even scale across ports and data centers. Here are 5 key announcements signaling a high-stakes, future-facing growth strategy. Let's listen in.
We have the ability to connect every critical layer of infrastructure that is needed to power the age of intelligence. in FY 25-26, we made a record capital investment of more than rupees 1.5 lakh crore in hard infrastructure. To put that in perspective, this represented over 30% of India's total new private sector capital expenditure of the year. At Adani Power, we are implementing India's largest ever private sector power capex program of over rupees 2 lakh crore with a target of reaching 45 gigawatt of capacity over the next 5 years. Our entry into nuclear energy through Adani Atomic Energy is another confident step towards securing India's long-term energy future, with land identified and a 10 gigawatt targeted capacity by 2035. We are positioning ourselves early to serve the growing national demand for clean, round-the-clock power. Adani Ports handle over 500 million tons of cargo in financial year 2025-26, setting an unmatched benchmark for the nation and creating a clear pathway to 1 billion tons by 2030.
Viewers, moving on. Commerce Minister Piyush Goyal and US Trade Representative Ambassador Jamieson Greer held multiple rounds of talks. Now, both the sides have reviewed progress on the ongoing India-US trade talks, signaling fresh momentum towards an interim deal. Now, Piyush Goyal has said that the discussions focused on deepening economic ties. And here is my colleague Rishabh Bhatnagar joining us for more details. Rishabh, what do we know about the meeting so far?
Absolutely. So what you have is the completion of the two-day talks between US and India, a very crucial round given the fact that you had the US trade representative in India for the first time, Jamieson Greer. Now, according to the statement, what we're picking up is that substantial progress has been made by both teams in the recent months. There is fresh momentum. Both on the political side, you have Trump and Modi, who've also met a couple of times. You have Greer, who met the finance minister and the commerce minister. So a lot of political momentum to these talks is what we're picking up. But what we also saw that these discussions are continuously focused on the interim agreement. So the first tranche of that comprehensive PTA is what both sides are still sort of looking forward to, and there is no sort of announcement that has been made so far. We don't know where the deal is stuck so far. So that is something that both sides are now looking forward to in terms of sort of bridging that gap between both sides when it comes to the tariff bit. So I think that is where you'll have some sort of a worry coming in. But all hands on deck, the negotiations have been successful according to these statements. So we might expect something more coming in from the US Embassy later in the day, but we'll keep tracking that as well.
Right. Thank you so much, Rishabh, for getting us those exclusive details there and tracking the story so closely. And we are switching gears now. FMCG majors are going beyond staples and soaps, pivoting sharply towards wellness and nutraceuticals with a fast-growing 16,000 crore opportunity in focus. Let's go across to my colleague Mahima for a deeper look at this fit and fab trend and also the companies leading the charge.
last year, FMCG was all about beauty products. We saw a lot of new products getting introduced, a lot of D2C brand acquisitions in the beauty and personal care. And this year itself, we've seen a lot of acquisitions happening in the healthcare space or the nutraceutical space, as we say. Today, Honasa went ahead and announced acquiring of Fluence Pharma, which is into the same category. And now, a lot of FMCG companies have been doing this. And just to understand as to how big this opportunity is, right? There is rising demand when it comes to beauty from inside products, and as per the Honasa filing, the market for this is as big as 16,000 crores. So every company can have a pie of this. And just to give a perspective as to what are the categories that people are looking at in this and what is the opportunity like, protein is one of the largest growth areas where Marico and HUL are already there. There's women wellness, which is a premium segment where HUL is making its mark. You have beauty from within, which is a high margin business where Marico Zydus is present. There's gut health, which is emerging right now as an opportunity where Dabur and HUL already hold some market share. Healthy aging is a very fast growing category where Zydus is already present. Functional beverages is where there's mass adoption. So you have Patanjali, Imami, Tata Consumer, etc. in that race. And there's Ayurvedic nutraceuticals, which has an Indian advantage. So you have Dabur, Imami, Patanjali, Zydus Wellness, etc. in this game as well. Now, if you take a look at different FMCG companies that have different products in this particular segment, you have Dabur, which has Scenes by Dabur, Chyawanprash, Honitus, Real Active. For HUL, they acquired Oziva very recently and has been growing significantly for the company, just like what Minimalist did in the beauty and personal care. Oziva has been doing it in this particular segment. Marico had acquired a stake in Plix in 2023. Recently, they went ahead and acquired a stake in Cosmix as well. Both of them are of the same category of nutraceuticals. Nestle has a JV with Dr. Reddy's, where they have products like Nature's Bounty, Osteo, Biflix, Ester C, etc. There's Imami, where they are focused more towards Ayurvedic wellness products. So you have Zandu, Aloe Fruit, Axiom, Jeevan Ras, etc., which form a part of their portfolio. Zydus Wellness is where they are focusing more towards preventive health as well as herbal wellness. So they have products under Sugar Free, Nutrilite, Weight World, Max Medics, Right Bright, Complan, etc. And lastly, you have Patanjali, which is mainly Ayurvedic focus and has Chyawanprash, Ashwagandha, Giloy, and nutraceutical capsules under their portfolio as well. So this is just a wave that has probably picked up and something that could become big when it comes to FMCG, focusing on one of this segment called nutraceutical or something within the healthcare space.
Thank you so much, Mahima, for that. And moving on from the FMCG space to the tech space, rising memory prices are beginning to impact the demand for mobile phones and even laptops in India. My colleague Ridhima is joining us with more details on the story.
Laptop and mobile sales have dropped down after RAM prices increased, so sales volume for mobile is likely to drop by 12 to 15% year-on-year in June after the entry-level price of the mobile has increased, and for laptops, the sales volume likely to be reduced by 16 to 18% year-on-year in June. Now remember that laptop and mobile prices have been increasing from December 2025, and mobile average selling price has gone by 20% from January to June period, and for laptop the average selling price has gone up by 15 to 25% from January to June period. Now because of this, the second-hand phone and laptops are seeing consumer interest, and but the first-hand devices could pick up in the festive season. Now this is as per the dealer checks and the IDC and Counterpoint data. Now, if we see customer interest under 10K of phones, there has been a drop in Q1 2026 by 42%. Between 10 to 20,000 rupees, there is a growth of 6%, and beyond 30,000 rupees of phone, there has been an increase of 10%. Now, this is positive for G&G Electronics, which sells second-hand phones and laptops, and could be negative for Dixon Technologies, which 80% of its revenue comes from mobile, and also they assemble the mobiles, and Reddington, which sells Apple phones. Now, why the price is increasing? The main reason is behind this is the RAM prices, which have gone up by 4x times from December 2025, and the Gulf War has also added to the pressure, and AI and database demand for the chips has created a supply crunch, and also the dollar, which has strengthened against the rupees, has added pressure on the input cost. Now, how important is this memory for the mobiles and the laptops? Around 45% of the mobile manufacturing cost comes from this RAM, and for laptops this percentage is around 35 to 38%. So now we have to wait and see how the companies increase their volume growth in the coming time.
Thank you so much, Rodhima, for getting us those details there. And viewers, Amazon has announced plans to build India's largest delivery in minutes network by expanding its quick commerce service, Amazon Now, to more than 300 cities across the country. Now, the announcement comes during Amazon CEO Andy Jassy's visit to India, where he reviewed operations at an Amazon Now micro-fulfillment center. And the company has said that Amazon Now is its fastest growing e-commerce business in India, with orders doubling every quarter since its launch. And Mumbai has woken up to relentless showers, viewers, as the IMD has sounded a red alert for the city and also Palghar, warning of intense rain. Now, thunderstorms and gusty winds have ramped up as the monsoons have, really stepped up its fury. So let's have a look at this report from my colleague Jui Jadhav.
The most awaited monsoon season has officially and finally begun in Mumbai, but the streets of Mumbai are full of water in its first rain only. Right now I am standing at Sion Gandhi Market area. This is an hotspot area. Even if it rains for a little while, this area gets flooded with water. And right now the situation is same because it is raining in Mumbai since morning. Even yesterday it was raining, but today since morning it's raining heavily, and this very hotspot area of Mumbai, that is the Sion Gandhi Market area, is flooded with water. You can see right in front of me a BST bus is waiting, is shut down. In front of the BST bus, a tempo truck is also shut down. Also the traffic is jammed because of this waterlogging. The BMC had stated that this year Mumbai will not face waterlogging because the nalas have been cleared up, but we can see the reality check over here that in the first rain itself Mumbai is facing waterlogging.
All right, as you can see that Mumbai is completely inundated with the advent of monsoons. And viewers, moving on, a commuter was killed on board a Mumbai local train after an altercation that reportedly started over a door-related dispute. Now, the victim has been identified as Mayank Lohar, and the government railway police is now investigating the case to establish the exact sequence of events and trace the suspect as well. Now, senior railway officials have visited Borivali station shortly after midnight, while the investigators have collected CCTV footage from the train and even the station. Now, Western Railway has said that it is extending full support to the probe as the incident again puts focus on commuter safety and even door-related disputes on Mumbai suburban trains. And a major rescue operation is also underway in Kolkata after the roof of an under-construction warehouse has collapsed. So, according to reports, more than 30 people are feared trapped under the debris after a portion of the three-story structure gave way. Now, teams from the NDRF, police and fire services and disaster management authorities have been deployed at the site, while cranes and heavy machinery are being used to clear the rubble. Now, 4 individuals have been reportedly been rescued so far, and efforts continue as authorities race against time to locate and even evacuate those trapped. And viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show.
Viewers, artificial intelligence is no longer just a tool for coders and engineers. It's rapidly becoming a workplace skill impacting careers across marketing, finance, consulting, HR, and even the leadership roles. Now, Scaler's latest India AI workforce report, based on the insights from over 11,000 professionals, suggests that AI is creating new opportunities, driving salary growth, and even expanding beyond India's metro cities. Joining us today is Anshuman Singh, co-founder of Scaler, who previously worked at Meta and was also part of the team that has helped build Facebook Messenger. Welcome to the show, Anshuman.
Oh, thank you. Thank you for having me.
So, Anshuman, before we get into the AI bit, let's start with your Meta journey. You know, you were part of the team that has helped build Facebook Messenger. So when you look at today's AI revolution, does it feel bigger than the mobile and social media revolution you actually witnessed firsthand?
Absolutely. I feel it is as big as the internet phenomenon. Internet was the first time when, like a single human could have published a website and it would be noticed by the entire world. Like before that, that was not even possible. Very similarly, like this today with AI is the first time that machines are no more dumb and they don't need to be told every single instruction. machines are intelligent now. So then now you're basically going and looking at every system that has been built over the last few decades and saying that, look, now that the machines are not dumb, how do you reimagine the system? So it's as big a change. And I think like that is why you're seeing these trillion-dollar companies being born, because everybody is just reimagining every single product being built out. And that just opens up a lot of opportunities.
Right. So with reimagining, it's also, unlearning that is happening, so to say, because we've been trained in a set pattern, but now everything is starting from the scratch.
Yeah, I mean, I think the fundamentals are still the same. The first principle thinking is still the same. People who have always been questioning why a certain thing happens a certain way will continue to still do well. But yeah, I mean, everything has to be questioned. Everything has to be questioned is this the most efficient way of doing something? And the answers would be very different in today's world than what they were, let's say, 3 years back.
Right. So Anshuman, what are the biggest lessons I would like to know from building products at Meta that eventually shaped your decision to really start Scalar?
Yeah, I mean, so Meta had this thing where like all around the office, you would have posters stuck. Every poster would either say move fast, break things, or the second slogan was make impact. Basically, what was drilled down into us was one, focus on impact, and everything else, including money, will follow. And the amount of money you make is going to be a function of the amount of impact you create. So that was the first lesson that I took with me. And the other was move fast, break things, which is focus on doing things and like moving really, really fast in doing those things. It is okay. You'll make some mistakes. Everybody makes mistakes. As long as you don't keep repeating the mistake, like you'll eventually succeed. So those are the two things I took away from there. Which I have sort of imbibed through my journey building Scalar till date.
Right. So even I'm going to take that, this very key suggestion that you've given and that, Meta really resonates with. And you've spoken to over 11,000 professionals, Anshuman. So what was the single most surprising finding that emerged from that research? If you could just share with us.
Yeah, I mean, two things. One is we thought that AI is primarily helping software developers, and that too, like junior software developers. Like what was surprising was that like one of the key impact of AI also has been people moving into leadership roles. AI has become this one channel where you keep, brainstorming different ideas and like figuring out like how to make decisions, or proof checking what you are doing, and that's helping accelerate the leadership journey as well. The second learning was like I think there's a lot of pessimism when it comes to AI, where people feel that it's going to take jobs away. When we talk to companies, when we talk to leaders, it's the impact of AI has been that it has reduced the time to get something done. Which means that the companies can actually now iterate faster, move faster, and it's not really taking jobs away. Like it's just enabling one person to do more. But there are so many other avenues now that are opening up as opportunity to do if you start doing well in a segment. So jobs not going away. That's learning number one. AI is also helping on the leadership level. That's learning number two.
So, in fact, coming to that question is only because one of the biggest fears today globally is job displacement. And your research suggests that AI is acting more as a career multiplier. So are we really overestimating the threat here, or are we underestimating the opportunity at this point?
I think both. We are overestimating the threat and underestimating the opportunity. The way economy works, and again, like I'm not an economy expert, but like basis my experience, the way economy works is, if an industry moves at a fast pace, which means if an industry starts to see increase in adoption, then that industry needs more and more people. AI is going to actually enable every industry to move much faster now, because it's just sort of replacing the mundane work and like automating a lot of the mundane work that exists in the industries, right? So for example, if I take something like drug discovery, inventing a new drug or like doing a new drug discovery would take years and years for humanity earlier. And then like with AI, we're now reaching a point where you could probably reduce that time to 1/3 or 1/4 of what it used to take before, which means that now more and more drugs will be discovered for the kind of new diseases that keep getting that keeps ailing humanity, which means more revenue, which means more people in the drug making industry. And that I'm taking drug discovery as one example, but this applies to all industries. If industries move fast, more and more business gets generated for that industry, which means more and more people are then needed in that industry.
Right, Anshuman. And so, which roles, according to you, are most vulnerable over the next 5 years, and which roles become significantly more valuable because of AI?
Yeah, I think roles today that involve a lot of mundane work, they are at risk. So, for example, and I'm just taking an example, but like there are many such examples. For example, a lot of what happens today in, let's say, data entry, it doesn't require a lot of intelligence, but it just requires diligence. Those kind of jobs will get replaced, if not today, then probably in a year from now or in 2 years from now. However, jobs that involve decision making or let's say taste, design, or intelligence in general, they'll become more and more important or more and more high paying, which is, by the way, like I believe that the Silicon Valley operates probably like a year ahead of us. If you look at the salary patterns in Silicon Valley as well, the top engineers, and if you look at the news, like top engineers, like one of the engineer had been offered like $1 billion salary. $1 billion is like roughly 10,000 crore salary. Somebody else was offered like $100 million salary, which is like 1,000 crore salary. Those numbers have never been seen ever in the past. Why that is happening is that if you're smart, if you're good, then you using AI, like you can do the work of, like 4 or 5 humans. So what your productivity or like your value to the company is just so much more. So hence jobs that involve intelligence or let's say taste and design are going to become more and more valuable. Jobs that are mundane, where you're not really applying your brain, but you're just going through the motions, they will end up going away.
Right. And what do you have to say about the engineering teams? So will that be becoming shorter day by day, or there is still space for them?
No, 100%. I mean, engineers are at the core of what is being built out. Like even for AI, if you see, the proof of the pudding is all the companies that are building AI, like the likes of OpenAI or Anthropic or Google, they're actually hiring more and more engineers. So that tells you something. You would require good engineers always. I think the distinction is in our ecosystem specifically, there is a distinction between good engineers versus really, really average engineers who are still doing very, very mundane work. I think those engineering positions where mundane work is happening, that will go away. And this doesn't only apply to engineering, it applies to non-engineering work as well.
Yeah.
Wherever intelligence is required, wherever brilliance is required.
Yes.
For example, I don't think, Himangshi, anybody can replace you for the work that you do. Because differentiation is required there. So wherever differentiation isn't required, you're just doing mundane work, those will get replaced.
Right. So Anshuman, on that note, what kind of courses are available at Scaler that could really help a professional working in non-IT fields like me? And how can they really excel in their respective careers with the help of AI? Or one needs to really change the entire career trajectory to to become an AI professional, so to say? Right.
I mean, so firstly, I wouldn't say that all the courses that we have is relevant for everybody. If, let's say, you were somebody in non-tech and you plan to, let's say, build a career in tech or in data science or in analytics, or let's say you want to go towards a business role, then like we have programs for each of those. We have a program for business, we have a program for data science, we have a program for analytics, we have a program for software engineering and AI. People who are in tech, if they want to go deeper into AI and machine learning, we have programs for those. So if you're somebody like that, then I mean, I'm biased, but I can say with a lot of confidence, like there aren't many better programs in the country today. In fact, like one of the things that we've been focused on is today I spend a lot of time working directly with some of the frontier labs, right? So the names that you keep hearing, I can't name them, but the big names that you keep hearing in AI ecosystem, like we directly work with them to improve their AI models. And whatever learning we have on how those models are improving, and hence what is the kind of talent that like is going to be required in the future, and what is the kind of talent that these model companies need, we keep changing or making those changes in our curriculum to make sure that that kind of talent is being produced from Scalar. In fact, like for this work that we're doing with frontier AI model companies, most of our hires come from Scalar.
All right, Anshuman. And also, Anshuman, one criticism often leveled at a professional upskilling platform is the affordability. So how accessible are Scalar's programs for learners from middle class or even modest income backgrounds? And what steps have you really taken to ensure that financial constraints don't really become a barrier to acquire future-ready AI skills?
Of course. I'll break it down into two parts, right? Like there are two parts, which is one is what is the price of the program versus what is the accessibility of the program. Those are two different things and are often confused to be the one and the same. Pricing, I would agree, is on the higher side for most of Scalar programs. And the reason for that is if you want to create world-class programs, you want to have the best kind of people. In our case, those are practitioners, people who are actually building these large systems to come and teach. And like build the right kind of ecosystem, get the right kind of mentors in the ecosystem, and that requires like the right kind of money to be spent. However, on the accessibility side, one thing that we've been actually always very focused on is like how do we create the right kind of financing for people who want to enroll, so that the immediate financial burden on anybody enrolling isn't very high, and hence like it's easy for them to enroll in the program. Our outcome rates are very, very high. So we get a outcome audit done every year. And like if you go on Scalar website, you'll be able to see that. Most people end up seeing like 2 to 3x jump in their salaries post the program, which helps in paying back whatever they had paid for the program. Unfortunately, like we would have loved to give the program for as low pricing as possible, but then it doesn't allow us to hire the right kind of people who can build a world-class program.
All right, Anshuman, understood. So Anshuman, now talking about business, so what's the road to profitability looking like for Scalar? Also shed some light on the fundraising plans as well for the company.
Sure. So the last report that we had published, or the last audit that we had done, we were already EBITDA positive. And the focus is, again, to increase the profitability margin as we go forward, because that's the only way the company gets built sustainably. What we're looking at right now is, so we are profitable. I mean, I can share exact numbers once we get the next audited report. Right now, I don't have a number off the top of my head. That being said, like the focus for the next 3 to 4 years is grow the revenue by roughly 3 to 4x, and make sure that the profits in the company are a significant portion of the revenue. And then hence, like we build the business sustainably. There aren't any immediate fundraising plan because right now the company is well capitalized. We aren't burning any money whatsoever. So I don't know like what I'll do even if we do go and raise funds.
All right. Okay, Anshuman. So fascinating insights there. And the message seems very clear that AI isn't just changing the technology, it's really changing the very definition of work. So the winners may not necessarily be those with the strongest technical background, but those who really learn how to effectively work alongside AI. Thank you so much for joining us, Anshuman, and sharing your perspective with our viewers.
No, thank you. Thank you for having me.
Yes. So with that, viewers, let's slip into a very short break and we'll be back with more action on the other side.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Months after the government has allowed 100% FDI in the insurance sector, sources tell NDTV Profit that insurance regulator has received applications under the new regime. And my colleague Shrimi is joining us with more details on this.
Well, that's right. India's opening up of the insurance sector to 100% FDI is beginning to see strong interest from the global insurers. What we are picking up is that IRDAI, insurance regulator, has received 3 to 4 applications from foreign insurance players seeking approvals for, acquisition, joint venture, and ownership restructuring under the new FDI regime. In fact, among the, these proposals under review is Prudential's plan to acquire 75% stake in Bharti Life Insurance. Also said that regulator has received this application last week itself and said to be examining the proposal, including the implication of Prudential's existing stake in ICICI. So under the current IRDAI norms, Prudential may have to reduce its holding in ICICI below 10% of the transaction proceed, as the current rule won't allow them to actually hold majority stake in 2 insurance entities. Now, sources further indicating that a handful of global insurers are already in discussion with Indian counterparts and are expected to announce partnership, acquisition, and even the stake increase over the coming quarters. In fact, some preliminary queries have already been made to Department of Financial Services under Finance Ministry, and that indication is quite positive, as they are seeking some sort of changes in their ongoing talks. Now, given the interest emerging in the sector, industry expects significant changes this fiscal year itself. Just to underline, the space already been buzzing in the recent past. For example, Allianz has announced a strategic partnership with Jio. Pyramid Group and Shriram Group are exploring life insurance venture as well. Mahindra and Mahindra Manulife are also in active discussion. So overall, government officials expect the liberalized FDI regime to attract a lot of fresh capital, and as a result, a lot of action expected in the coming quarter.
Thank you so much, Shrimi, for that. In fact, viewers, the Cabinet Committee on Economic Affairs is expected to meet today to consider a landmark banking transaction involving Dubai-based Emirates NBD and RBL Bank. So the deal, valued at around 26,000 crore, involves Emirates NBD acquiring a 60% controlling stake in the Indian private sector lender. And if approved, this would mark the largest ever foreign direct investment in India's banking sector, and also the first instance of a foreign banking entity securing majority control in a listed Indian commercial bank. So the transaction, announced last year, has already cleared key regulatory approvals and also includes a preferential share allotment, which is a mandatory open offer to minority shareholders, and also the integration of Emirates NBD's existing India operations into the RBL Bank.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.